Dharmesh has come out on the show with a very interesting report. And he's making a case that by March of 24, which is barely a few months away, market, actually Nifty could be headed towards what, 21,000 odd or even higher, Dharmesh. This is a peculiar report, and ahead of time, nobody else is talking about that kind of a number on Nifty yet. What are your long-term charts telling you?
Yes. Good afternoon, Ajay. Yes, thank you for inviting us on your show. And yes, we remain to be positive for the market, and we believe, I think so, we are in the structural bull market. And inside the structural bull market, we believe, I think so, things should get better and better going forward. We had a target for the Nifty for 21,400 for the Nifty by March 2024. We expect Nifty to head towards those levels. At the same time, 18,200 remains to be the very strong support, which we expect to hold, which is again near the 200 moving average and also the 50% retracement of this entire rally from 16,800 to 19,500. So yes, things should get better and better going forward in the next 6 to 9 months. The reason why we are so bullish on the market, there are 5 reasons why we see that the market should get better from the current levels. One is if you look at the market has been trading in this range for last 6 months to 9 months, so in the range of 16,800 to 19,000, and finally a breakout implication target heads towards the 21,000 of last 2,000 points rally. Apart from that, seasonality factor also resembles us. We have done some research for last 4 decades, which tells us that the every third year of each decade has always been the positive. There are the third, fourth, and the ninth year. We are into the third year, 2023. Each third year of each decade has always given a positive return with a median return of 18% since 1980. So that again remains to be more positive for the market. Third is again the election year. We have also done the analysis on how the market behaves ahead of the election. So what we have seen that the pre-election year, in last 4 instances since 2004, most of the times market has traded positive. So again, that gives us the confidence that since 1983 to 2004, so there are 10 instances where out of 10 instances, 7 instances are there where market has traded positive. Apart from that, last but not the least is the dollar index, which has seen a breakdown below 100. And we expect dollar index to head towards 95, which again gives us the confidence that the FI flows towards the emerging market should start coming in, and that should again lead to a fuels to the market towards the higher target of 21,000. So overall, I think so, taking all the picture together, yes, we remain to be positive for the market, and there is a lot of noise ahead of the elections. The market
Right.
behaves, there's a lot of concern.
Sure.
That gives us the confidence that things should get better going forward.
Sure. No, sure, Dharmesh, very interesting analysis, whether it's the third year of the decade or the election year analysis that you have done. Just wanted to get a sense from you, sectorally speaking, we had seen quite a bit of breakout as far as the PSU banking names is concerned a few weeks ago. Do you think that to be a structural, change as far as the charts are concerned? And what's your take on IT now?
Yeah. So yes, if you look at the PSU bank chart, there is a long decade breakout. The sector has not done for a long time, and a long decade breakout does not get fizzled out in a couple of weeks or a couple of months. We believe there is a structural turnaround in the PSU banks indices that should get better and better going forward. Again, if you look at the market breadth, I think so, where 70% of the stocks are now trading above the 100-day average. That again gives us the confidence that the current breakout should not get fizzled out in 1 month. But yes, it should continue for a couple of years. So we are looking more positive for the PSU banks as a whole. Sector also, if you look at the PSU index, also has witnessed a long decade breakout, which should get continued over a period of time. Also, if you look at the ratio chart of PSU index versus the Nifty, it is at the decade long lower levels. So it clearly indicates, I think so, the things should get better from the current levels for PSU index and as well as for the PSU banks. Apart from that, IT sector. Now, if you look at the IT sector, some peculiar behavior we have found in the IT index. If you look at the chart from 2004, there have been the 4 major corrections in the IT sector, where the corrections are in the magnitude of 34 to 28%. And each corrections lasted for 6 to 7 quarters. If you take it into the current context, we have already done 6 quarters correction with 34% corrections. So price-wise as well as time-wise, we believe, I think so, things are near the maturity level. We don't expect IT to see a breakdown from the current levels, but I would say one should take a contra bet in IT. This is a good level to enter into most of these large cap stocks, and we expect IT to see relatively outperformance in coming next 6 months.
Very quickly, tell us 3 stocks which would lead this charge of the Nifty towards 21,000 by March. Reliance, of course, is very active and back in momentum. There's an even bigger behemoth being born, HDFC Bank in the new form, and one more. Any other top 3 of your choice, which will lead this charge?
It's a too difficult question, Ajay. Most of the stocks have been positive in Nifty 50. But yes, coming to your question, yes, we believe, I think so, Reliance is the one which should lead the rally. Apart from Reliance, we remain to be positive of BFSI as a sector, as a whole. The banking, again, we believe, I think so, State Bank of India, HDFC Bank, and most of the private banks should lead. And IT sector as a whole, where we remain to be positive for TCS and Infosys from the current levels.
Okay, Dharmesh, on that note, we'll let you go. Really appreciate you joining us on the show.